everyone to this CU Digital Town Hall. I am broadcasting today, this is Town Hall 65, from Desert Financial. I'm actually in their shop. I was here this week to work with their digital strategy team on AI concepts and other things that they're working on, and I had the pleasure last night of presenting to their board. So Steve, that puts me just a little bit closer to you. I think you're out this ways, right?
Yeah, Scottsdale, Arizona.
Yeah, so not too far. And I'm very excited to be here. And so I thought, well, I'll do a remote broadcast because, Zoom works from anywhere. So welcome on this Wednesday. You know your host. My name's John Best. I'm the CEO and founder of Best Innovation Group. And Mr. Lawson, who is the creator and host of the CU broadcast. Hey, Mike.
Howdy do. How's it going?
Yeah. So, Mike, let's talk about our sponsors. You know what? This twice in a row. I'm going to give this one to you. Let's do it.
More than happy to oblige, sir. First up, we have CUNA Councils. Those are the fine folks at CUNA who put on these really spectacular conferences that cover just about everything and anything: technology, business operations, HR, leadership, marketing, you name it. They cover it in a conference. And John, you've been an integral part of their conferences over the years too. So I'm sure they're very thankful to have you on board. And Steve, you've probably been to a few of these as well, right?
You betcha.
Yeah, they put on a good show for sure. So the fine folks at CUNA Council is one of the sponsors of the Digital Town Hall. And then also the very fine folks at Correlation, one of the hottest core processors in the credit union industry, for good reason. They are doing some phenomenal work there for credit unions and continue to do so. And then also you got CU Broadcast. Hello, we're just we have John and Steve on many times. Those are some of our favorite guests to come on and talk about all the cool things going on in the credit union land. And then obviously the fine folks at Best Innovation Group. There he is, the fearless leader, Mr. John Best from Big. John, I'll let you have the floor now. Take it away, sir.
All right. Well, guess what? I was able to secure probably the most sought after guest anyone has ever. This is a moment for us. I am proud to say I've known this gentleman for some time. I've had the pleasure of being mentored and learning from him, and to have been in many of different environments with him. One of which, I don't know if you remember this, Steve, but they had to separate us at MIT. Remember the next day, and they didn't realize they put us at the same table, and then they moved us apart.
Oh, that's funny. Yeah, we were geeking out too much, I guess.
Yeah. So they, like kids in kindergarten, we were at an MIT executive class or something, and they separated us. Steve is a founding partner of Cornerstone Advisors. He is all things financial, but on top of that, he's a good human being. He's excellent to talk to, and I think the secret to his success is that he understands humans. And he also, the real secret to success is he's the one person that perhaps, and this is still yet to be determined, can keep up with me in Van Halen trivia and minutia.
Wow, that's saying something.
That is something.
We had a Van Halen off one night, if I remember right.
Yeah, out in Agora Hills or somewhere at the Four Seasons, I think.
Yes, it was well attended, and I think it was a draw. Although I like to tell people I won.
I think you won by a hair, but yeah, if we can get to overrated, underrated song at the end, that would be great.
Okay, overrated, underrated song. Are we doing all genres, including Gary?
No, Van Halen. Yeah, all genres are okay. It has to be Van Halen. All right.
Okay, I'm in. Well, welcome, and we had a lot of really great things to talk. And also, by way of introduction, fresh from Desert Financial, who drove home today, Kevin Sarber. Kevin, you there? Got to find him
here. Still driving.
Yeah, he made it all. Look, he's wearing his golf hat, so that makes me proud. That hat was $92, and so I wanted to make sure that I got him a hat, and he wouldn't
inflation.
have left with it. Well, you played.
That made out of wood.
So Steve, before we get going, tell everybody what you do. Tell us about Gonzo Banker and how it is to have Ron Chevlin working for you. So let's have all.
Oh wow! Well, I like to say Cornerstone Advisors exists because we do not believe that the U.S. should have 5 big banks that control everything. So our mission and purpose is to work for the community, regional banks, and credit unions of the country to keep the grassroots of financial services alive. And we do everything from strategic planning to performance benchmarking and process improvement to helping financial institutions select and negotiate contracts and implement technologies. And part of that is staying up on trends. Where is the puck going from a competitive standpoint? Where are customer behavior shifts happening? And I've known Ron, like you, John, forever. Back when Ron was at Forrester, before IT, and I always just said, we'd sure love you to join our band someday. And we were able to do that about 5.5 years ago. So Ron's been tearing it up with great research he does in the industry. And I encourage you to read his weekly Forbes column, because he's snarky and provokes. And we don't always agree, operating on the ground in day-to-day stuff. And then Ron looking, 100 miles ahead. It's kind of fun to have the debates we have internally at Cornerstone. And Gonzo Banker is one of the vehicles, in addition to our Ron's Forbes column, some of the research he does, to talk about our opinions, our spin on what's going on out there, what's real, what's overblown, what do we need to take note of.
And many organizations rely on your spin, as it were, and many are around because of your spin. So, and then just a bit on the skull and crossbones Gonzo Banker, just because it's such a cool logo.
I love it. Love it.
Well, real quick, the story, this is now 21 years old, but Terrence Roach, one of my partners, and I were sitting in La Crosse, Wisconsin on a snowy December day, and we were complaining about the media and their kind of very high level coverage of what was going on in the industry. And I knew Terrence, my partner, is a Berkeley hippie who loved Hunter Thompson. And I wanted him to like my idea about an email newsletter. They didn't have the web back then. It was just email. And so I said, we could even call it Gonzo Banker. And then, so he said, that's a great idea because of Hunter Thompson. And then one of our other writers, Scott Hodgins, had a buddy who liked to draw stuff. So we just gave him the task of creating a logo, and he decided that kind of pirate with the tie would be good for bankers. So that's how it came to, and I think we paid $500 for that logo that's now 20 years old.
No, I'm very impressed because it has stood the test of time. So, all right, so let's get into our topic. So Kevin really wanted to tee this one up. Our president, for those of you that don't know, Kevin Sarber is the president of Best Innovation Group, and he keeps an eye on, like, I focus on tech, and I'm like way out there, crazy ideas, drones, whatever you got. And Kevin's kind of keeping his foot on the ground and looking at things like regulatory issues and whatnot. We thought this would be a good time to have that conversation. Go ahead, Kevin, tee it up.
Oh, Steve.
Hey, Kevin.
If that is your real name. Oh, go ahead.
So one of the things that I think is on the horizon, and some banks have already announced changes due to the expected change in legislation, primarily pushed through by Senator Warren, and looking at overdraft, and the fact that some financial institutions have already turned off overdraft or are planning to do so altogether. There are some that are reducing. There are some that haven't done anything, and really we're kind of like, we don't know. We haven't even looked at it yet. Mm-hmm. So a number of things there. I'm always a little worried when the government gets involved. One of the things they published in an article was that they were looking to change debit rules to be, if you had a dispute on a debit transaction, you had to keep it open for up to 2 weeks so that you could properly match the transaction with the auth. And so that's one crazy idea that would be very difficult to do. But also kind of the definition around overdraft. Is that an overdraft transfer from a savings account? Is that an NSF item that comes through? Is that a courtesy pay item? So help us all with your knowledge about what's going on with overdraft.
You bet. Well, if it's okay, I was going to share screen for just a few thoughts. Does that make sense?
Yes, please.
Pop it up. I know this is a discussion, not a lecture, but just a couple things based on Kevin. You and John and I had a very quick call last week getting ready for this. I think to your point, Elizabeth Warren is empowered and she's got great intentions. I think there's a resurgence on looking at the underbanked, at the low to moderate income area. And I think what's really interesting about this topic is we're navigating, we don't like regulation that's irrational or overreaching, but we understand the purpose of some of the intent. It's just, does it get lost in translation? I'd use the example of the Mortgage Trade Act, from the CFPB, what was going to, quote, simplify and make easier the mortgage process. And the net effect of it is we all click on about 60 more yellow boxes on DocuSign that we don't read. And that's the net effect of that great improvement. So it's that, and it's how this product has evolved, these two products, really Interchange and NSF Overdraft, to kind of fund and replace the traditional checking fees that existed when we all grew up in banking. And so it's kind of what's the economic shift going to look like? I think one thing I just point out really quickly is the banking industry today, there's about 5,000 banks, 5,000 credit unions, but the banking industry is $22 trillion. And the credit union industry is just about to hit $2 trillion. So there's a big difference in size. And the banking industry has commercial lending, wealth management, private banking, sometimes bigger mortgage banking operations, though credit unions are catching up there. But the point is they're not as dependent overall, especially the bigger bank you get on overdraft fees. I don't think that's the case. And Kevin, you're worried about especially smaller credit unions that haven't diversified revenue into lines of business like business services or mortgage banking. They're fairly dependent on this. I think the story, though, is the legislation is going to be driven towards those $22 trillion in assets banks, and we're going to come along for the ride. So to your point about CUNA and Mr. Nussel and everything, it's that understanding. And I see the Cam Fine at the ICBA, the independent bankers, saying the same thing. Before you just paint us all with a single brush, try to look at the impact of that. I think some of the headwinds we're seeing right now is if you listen to Senator Warren in her hearings and things, and the chastisement of Jamie Dimon a few weeks ago, she used the term, there's a new cop on the beat. And she's evangelizing that with a CFPB director who is really appointed or influenced by Ms. Warren. You've got Carolyn Maloney. This bill has been around, I think, since I was a teenager, but it's back again. And what that basically says is the limit of one overdraft fee per month, one overdraft charge per month. So, that is sitting there, but it's certainly a different environment now where, if I'm in Vegas, Kevin, and I'm betting the odds, do I bet the over or under here? For years, I'd bet the under. I don't think it's going to pass. It's a different time now. You mentioned, I think there's three banks that are kind of interesting: Ally, Huntington, PNC. Kevin, you may have a few others. I want to point out one thing about Ally that was very shrewd, John and Kevin, is that Ally is an internet digital bank, hasn't really penetrated checking that much. So they really today are a big savings account challenger bank, and they fund a lot of that and put it into auto lending with GMAC. So what was shrewd about it is they said, we're not doing overdraft fees. And what's interesting to me is that big bank, over $100 billion, only has $5 million in NSF overdraft revenue. And it's because they don't have a huge amount of checking accounts, and they don't have a lot of transactional activity in those checking accounts. It's more a baby boomer who has a very clean garage who writes 4 checks a month from that versus, the traditional mass market. So what they did, think about this from a marketing standpoint. They now have completely said, we want that market, but we're gonna bring it in with no delivery costs like our competitors. So they took a weakness and tried to turn it into a strength, and I think that was pretty shrewd. For people like Huntington, what they're really trying to do is get it more to bring back the old credit line product, the old unsecured overdraft line, which everybody got rid of because the balances were so small and the cost to basically originate and service was so high. Every single one of them lost several $100s a year.
If we keep going back to the future here, we're going to be issuing check guarantee cards.
Yeah, the old check guarantee cards. And then PNC, I think one of the things there also is Ally is doing this too, is no charge transfers, basically. And if it's from a money market, no charge transfer up to the 6 per month limit. The other thing I'd point out really quick, two things that if this happens, that's a body blow. But there's also the Federal Reserve proposal related to dual unaffiliated networks for card not present. And if you've looked at the brown boxes in front of your house recently, a lot of commerce is now card not present. And just because a lot of folks chose the Visa MasterCard as their second network, today, a lot of card not present is running through SIG. And this could be a shift where a good portion of that could be forced to shift to PIN. And then another thing is where John Best plays, payments disintermediation. I've got a little chart on that real quick, but to me, those are big ones. And I just want to point out a few things interesting. And I'd encourage you guys, there is a report. I will get it, John, so we can, the name of it. But if you follow Financial Health Network, they do a spend report for the low and moderate income each year. And I want to tell you, Jennifer Tesher and the group at Financial Network are awesome and mission focused. What I'm seeing though, is their data is getting its way into Congress and into policymakers because it's really that target. So if you look at overdraft revenue, and I got to tell you that, Kevin, I don't know if you have a feel for this, but the 12 billion is a pretty low number because it was measured in the COVID year. That number I've seen as high as 30 billion in the past. So the banking industry earns 250 billion a year. So it's not as big as the press and the politics would like to say it is, but their point is that more than half of that is paid by the low to moderate income people. And that's the thing. The one thing I'd point out, they also show though on the right, if they're 7.3 billion is paid by low to moderate income Americans on overdraft fees, more than that is paid by the combination of pawn shops and payday loans. So if they're going to go after solving the problem, they also have to focus on this. And then Cornerstone, we think every credit union should benchmark with Cornerstone and be on our performance vault so we can all share data. But you've seen kind of NSF OD per checking account at about 65. It went up to 67 right before COVID, and then dropped at least temporarily 20% or so. And then debit's about 85 a year. So the thing I like to point out is, okay, we're charging overdraft fees and we're getting interchange, and we've got Mr. Durbin and Ms. Warren. That's about $152 per checking account per year. But all of that has to really help fund all of this on the right: branches, ATMs, contact centers, digital banks, secure payments, fraud protection, over $50 fraud losses, and FDIC insurance. And basically the numbers don't work. If you got rid of that, the pressure starts to get really interesting on, do I go back to monthly maintenance fees? Does this mean I'm going to have an acceleration of closing branches because I just can't generate the revenue? And then how do I replace that revenue? Kevin, I know you've done this before when you were a chief operating officer, but what I'd encourage the attendees to do, just take your direct branch costs, just the lease, the staff, the depreciation, just in the branches, divide it by your share draft accounts. And that will open your eyes to, what is the cost of this delivery, even if I don't count digital and contact. If you want to really get a stomach ache, add the cost of your NCR contract and your PSCU contract to this, or at least part of it. You've got payments revenue coming in credit card as well. But I don't know if you have a comment on that, Kevin.
Yeah, I mean, it's like you said, we've been squeezed in a lot of places, and interchange kind of has been the last piece that we were, at least able to kind of, for most credit unions, bypass it with the first pass, or at least lessen the impact. But
right.
Like you said, this is a new day, a new time. And a new group of people that we're dealing with. In California, we're going to have our own CFPB-like office. And so it'll be interesting because we tend to jump out there once we do that. So we'll rush to it, and we'll let you know how it goes.
Yeah. And again, if all the policymakers do is outlaw these things and we all put in a $15 a month service charge, we're back to zero, but it'll be interesting to see how everybody competes that way. Now, what do we do about it? Not just let's grow.
Hey, Steve, didn't Bank of America actually implement a fee during
the last round. They moved a
pass?
lot. Yeah, they really moved a lot of folks more to monthly maintenance, and there was a little bit of a joke that they fired a lot of customers and sent them to credit unions who weren't being careful. So we do have to watch that. We want to be very member focused, but what's the economics? And I think there's a few things this means strategically. One, we gotta go after revenue diversification. So mortgage banking can be a profitable business run the right way, especially in a direct to consumer with, kind of model that great credit unions like BECU and Baxter Credit Union do very well. I think credit card is always something we're after, but think about the payoff of flipping some debit cards to credit cards, or giving almost a hybrid feeling of a debit card, meaning that we auto pay the credit card all the time so they don't increase their line amounts. Other things like business services are probably going to be needed going forward in terms of that. But then we also just have to watch the economics of our delivery. And we've got to put a sharp pencil to every branch we have and all our contracts and our vendors, on the cost to deliver this. And then, I think tied to that is going to be what's the right amount of scale in this new business? And I don't like to be pessimistic, but it seems like if you regulatory squeeze the average margin per relationship, you're just going to have to operate with more efficiency.
Well, it's interesting because we've had this discussion on this in this venue before, and we always come back to what you just said a minute ago, that $15, right? But what's interesting is, could we spin that a different way? So I'm going to throw this out to you, Steve.
Sure.
I bet you get some sort of box to your doorstep once a month. I don't know, a Bark box, a Van Halen box. Have you seen these things, the sort of box subscriptions?
Yeah.
But people are willing to pay $9.99, $10.99. That model has really come back to bear. And you point out the brown boxes on the doorstep, which I do want to talk about that, because I do think there's a way to offset this. It sounds like you're going to get to it, so we'll get there. But is there some new model where a subscription could be brought to bear with something valuable along with it? Is it an AI concept? Is it autonomous banking? Is that the switch? Because you're right. I mean, I think you're actually lacking, because now there's more stuff, right? There's sneeze guards, there's the work from home for everyone, there's extra fraud protection for that. I mean, that right triangle has definitely grown even more in the expense area because of COVID and the cost of doing business. So is there an opportunity? Could it be more palatable if presented right for some sort of subscription based account?
Yeah, that's a challenge, because if I've always looked at that, John, and I'm not as and Ron, my research director, you mentioned, he would say things like bill auditing services or other features that you're seeing the fintech start to load on, and I think they're worth exploring. If you go to the industry of Strategy Core and Kasasa and those kind of folks who tried to add things, I think there can be an argument. I think it's finding the things that folks really care about. The other thing, though, I think that's interesting is, can we make this mission focused and tie it to our financial health strategy? That should we really be figuring out in our low to moderate income who are our excessive users of NSF/OD, and what can we do with them, and how do we help them, and how do we bring other products? I only bring up Chime because they're playing this brand very well, but what I think they're just so good at is design. So, they when they came out with their $200 fee free, they called it Spot You, and I just think that's so real. Hey, we'll spot you, and they have fun with it. And then they have this thing they introduced in April called Boost, where they let you send $5 more of OD limit to your friend, and they can send you back. And I think all that's trying to do is create more network activity and word of mouth. And then they're very big on, a credit builder credit card, trying to get folks more to the credit side than the debit side. So I do think, to your point, John, how do we tie this into financial health, but then have kind of the delivery and the product discussions where hey, we ran a pro forma, and if we get 20,000 of these, we can actually make money and make the credit union self-sustaining.
Right.
But I'd love to hear, go ahead.
Good. So I was going to say,
I'd love to hear some of your innovation thoughts on what people might pay for in that subscription.
Well, that's where I'll tell you my big innovation thought is autonomous banking. So let's take Tesla, for instance. I don't know. Kevin was showing me last night, and I was blown away that the new Tesla models, they're looking at all this flooding around the country, and apparently, I don't know, Tesla can, James Bond turned into a boat. Was that what it was, Kevin?
It was the Tesla Model 3 that has a boat mode, and they were actually driving it through, middle of the door water depth, and it was just plugging along.
Wow.
And so what's our boat mode, And I do think that they're on track. I like Spot Me. I think you're right on there. Have you also noticed that if you pull up their website, they're really focused on their card? Like all of these neobanks all have the card right there, and they're these steel cards. And I think that what they figured out, from what I can tell from looking at their, from talking to them. By the way, Anthony Scaramucci is a big investor in this. I've had a few discussions with him around this. He was one of the early investors, and it's interesting, an interesting fellow to talk to about this. But him and his group were, heavy into that and heavy into Plaid. And what they believed in was the digital marketing of this. And so what I believe they're trying to say is this is how you build credit. And by the way, these guys don't have loans yet. They still don't have loans.
Correct.
They don't make any loans. So they seem to be advertising things that we already do. Like, for example, giving you your paycheck at a time. So my thought on an innovation that people would be interested in would be, I think, the autonomous banking model, this hybrid model like Tesla. So Tesla is it'll drive, but you still got to be behind the wheel, right? You still want some control. You're not quite there to trusting it to, just fall asleep in the lane and see if you get there. I think that there's something along those lines that is really what everyone's looking for in the finance space, and they will pay for that. It's not here yet, but I do believe that that is what everyone's sort of driving. I call it, autonomous banking. And there are two kinds of organizations. There's going to be the, organizations that embrace AI and the dead and the gone. And so as they move in that direction, gathering up those groups and building something that's a product, I think that's the disintermediation we're looking for. You once said at a meeting, and I remember this so clearly, because we had this discussion, that eventually, thanks to all the fintechs and whatnot, we may be left with what'd you call it, a DDA stink pile. That was the word you used, which was, hey, we're just really a bank, and we're really just an API into a system that's providing money at that level. And what that does is it decreases our relationship. Where I see the benefit of a subscription model would be to increase that relationship, but not about the mechanics, not about the day-to-day. That should be handled by something else. It should be more forward-thinking, more forward-looking, like this is, and increasing your financial relationships. I think that's the value. Yeah,
I think Ron Shevlin at our firm calls it a paycheck motel, where they just stay the night and then they go on to other places. But you're right. I think when we try to do something like a subscription in our industry, our strategy tends to be we almost imagine the branch platform, and it's a very outdated model, to your point, John, that, hey, and then our people are trained to try to sell value, but they almost apologize when they bring up a fee.
Yeah.
And, I'm really sorry.
Sorry,
but they also say you get this stuff, but I'm sorry. It's a horrible way. Whereas I think what you're saying here is folks like this get so good at the digital experience at showing a value prop and usability, then when it's time to say, click here and download and start your subscription, think how much that goes on today. I mean, the joke from COVID is how many of us now have Hulu Plus and HBO Max and Disney Plus and other things. ESPN too, and it's just like, well, why'd you do it? I was going to watch something and I clicked. So can we get more to that? I don't mean to be tricky, but can we take some of the friction out of, it's really not that big of a cost and the benefits are worth it? And I think that's through digital experience. I don't think it's the old platform sales way.
No, I think it's a free, I think you get the free account and you get the three things. It'll automatically track things like Hulu and Paramount and try to help you do that. So maybe that's the free give me on the AI. But if you upgrade, it'll look ahead and it'll deal with your HOA and it'll deal with these other bills and it'll help you, help you, save up for that car, but you won't even know it because of the way it's sort of automating that. And I do think you're right that anything, why that subscription, there's two reasons why subscription stuff has gone crazy. The first one is because you can pay right in the app through Google Pay or through
no friction.
There's no friction. It's so easy. In fact, you accidentally do it if you got the face thing on. Like it says, would you like to do this? Doing a face? Oh, wait, no. Okay, fine. Whoops. And then there's the second one that's very similar with Google Pay. But the other big game changer and why I think that, and this is something I think that's sneaking up on us, is Plaid. So Plaid has really cracked that ACH nut that was a huge barrier for integrating your financial systems with all these others. And if you think about it, ACH is actually another thing. If you went back a slide to your triangle, I think you have to add ACH to that model and wire, but ACH primarily because of Plaid, people don't have to wait anymore. They don't have to go through that micro transaction. They're setting up very quickly these ACHs, and it's something I've been coordinating with our credit unions, our innovation credit unions, to take a look at, because I think that's a death by 1,000 ACH cuts, and the ACHs cost you about 26 cents as opposed to your point. And that brings me to what you were talking about, where if you go back again, I'm gonna keep making you go back, that $152. We could make a huge bite. So I'm going to do a little test on the call here. I want to see something. Okay. So everybody who's on the call, please do me the favor. If you have an Amazon account, just put, the number 1 into the chat out to everyone so we can tell how many people have them. So just, type in and say, okay, there they go. So people are telling us they have their Amazon account. So I bet we're out of the 28 people on this call, we're going to have probably close to 90%, and the rest are more like more Unabomber folks who I'm surprised are on this call, right? Okay, yeah, that's good. So we've got a lot of folks who have it. Now I want you to go ahead and put the number 2 in if you have as your primary payment source in Amazon your credit union's either credit card or debit card. I don't care which, and be honest, because we'll know.
Yeah,
and it's not going to be everyone. And what I find is when I do this straw poll, it's about, I find it even amongst people who theoretically should be part of that organization, it's only about 10%. And so what happens if you drive that 10%? So could we agree, Steve, that amongst people who are heavy users of the credit union, probably 90% of them have an Amazon account? Would you say that's a fair number?
Well, I mean, especially in the truth about the credit union market, it's a middle market and mass affluent member base primarily. It's not primarily low to moderate income. So yeah, I would say.
Okay, so if they only have a 10% penetration for their cards, that leaves an 80% growth rate, which from a card on file, isn't card on file interchange worth more, as you were pointing out?
It is today. Now there may be some things that shake that a bit. But yes, and it's where all the growth is, it's not really point of sale with Apple Pay. It's card not present with Amazon and Apple and other things that are driving that retailers. Yeah.
So how do we crack that nut? How do we get them to see us as that digital entertainment, that digital supply, that digital delivery, card? Because that's what I think that is happening with, like, for example, last night we were speaking with Desert Financial's board, and one of the board members pointed out that all 3 neobanks that we showed look to have a steel card. Have you seen these steel cards?
Oh, and absolutely. And I think part of that is because it's really just a record of the number I'm going to put in my digital wallet. I think a lot of this is because most of my payments is going to exist as a number, but it's a nice, undestroyable way to preserve that number to put into every soft wallet out there.
Yeah, and so it's fascinating to me the sort of social implications of that. So yeah, that's kind of I think there needs to be innovation around card on file. I think there's tremendous value in that. I think there needs to be innovation. If you were going to have a subscription, it can't be a oh, it can't look funky. It's got to follow that same path like Paramount and Hulu and all the well-worn paths that have already led to success there.
Right.
And then 3, you can't be apologetic about it. I couldn't agree with you more. You can't listen, we're sorry, but we have to ask you for $1 now. For all the free stuff we give you, we've got to stop being that way. We provide value, and more value than any other organization, and we're just afraid to tell people.
Well, doesn't subscription have a more positive connotation rather than a fee? So there goes, some marketing messages there. So it's kind of what I'm thinking.
I say subscription. I think we send them a box every month with a picture of Steve Williams, various pictures.
I think I've heard this before, and let's, in this world where subscription and I guess productization is going crazy, and it's cool design stuff, and it's all in a digital mobile first kind of world. Take it back and say, what is a membership to a credit union? If we made that a subscription with premium levels, I can do this. And to your point, John, maybe the subscription needs to be, I think an insight you just gave me was, if we're going to build subscriptions, let's do it with the aim of being top of wallet. And, the optimal would be top of wallet with credit because it just helps me a little bit from the self-sustainability. But and then your point would be, and I love your point about autonomous banking in the sense that I've always joked, 10% of people signed up for Quicken, and they have very nice check ledgers and clean garages. The other 90% would never do it. So
they're the type of people, like when they take the wrench down and behind it is the drawing or whatever. Is that what you're talking about?
Yeah. Or when you borrow their wrench, they start calling you 15 minutes later why it's not back on their rack.
Right, well, they've Apple tokened it all or whatever that thing is.
Yeah. So the 90% of us, it's autonomous is like, I'm thinking for you, giving you those suggestions. The only thing I'd say that maybe if there's a way with the idea of my member service folks or my quote financial coaches who then can be in that autonomous banking and also bring the human aspect to it. Like, hey, I'm getting these suggestions. What do you think? Oh, I see those. Let's do this. I think one of the opportunities with the subscription is it comes with the concierge. It comes with the credit union advocate. And I think that is a difference of some of these big shareholder companies that are just going to want to have an app and scale.
I would agree with that. And you know what the big enabler for that is going to be, right? It's going to be 5G. So there's a lot of grants that are going to help us overcome the digital divide in the rural areas. The rural areas right now, and to your branching point, they have to branch. If you're in Michigan, like Forefront, great forward-thinking community whose credit union is saying, hey, I got to continue to branch. But if you look at the grants that are out there for the communities, which are now being taken advantage of, you're going to find little communities. And like, I just bought property in Tennessee, and I just got the note today that, hey, by September, I'm going to have a fiber gig to my house. I mean, I don't even have that in the affluent area I'm in Colorado Springs. So as they cross that digital divide and we see 5G begin to proliferate as an opportunity, then that's going to create this. It's going to take the investment in video that people have made for the appointments over the pandemic and make it really super valuable, like ITMs over the phone, basically. I think that's the other piece, because you're right. The most valuable piece of the credit union has always been its people. We were talking yesterday about this interesting concept. So we were talking about facial recognition in a branch. And I said, that's great, but I have a question for you. What happens to, like, let's say Steve walks in the branch, the facial recognition recognizes him, but he turns around and walks out. Like, what's that mean? Like it's almost like we talk about these drop-offs in the digital world where, hey, Steve signed up, got to here and quit. What was the barrier? So was it a long line? And we started talking about it, and I said, and not just me, I think Kevin said too, because he's smarter than me. Maybe it's that the person that they want to see isn't there.
Yeah. Oh, interesting. And we bring up Chime, and I'll just say it's funny because, Chime is very fascinating because now at 15 million app subscribers and no branches, you start to say, I know they don't make a lot of money because it's just debit interchange, but wow, think about the operating costs now for 15 million people giving me that $85 a debit, or even if it's $50 a debit, that adds up pretty quick into operating revenue. But did you see the incident where they were closing accounts and not returning money a few weeks ago? And everybody had the same complaint on the message boards. There was no one to talk to. This was happening to me, and it's the old idea that the the app only or the tech only companies are great when everything's going right, but what about when something goes wrong? So I do think a digitally wired workforce who has member advocacy kind of in their blood and some knowledge around that tied to this digital subscription is a model that may have some legs. And again, you got to do some lending to make all this work. A lot of this subscription, John, has to result in direct loan production and lots of mortgage referrals, because that's where you bring it on home from a profit of, just being in the deposit business with, not private banking customers is a rough game.
So I had an idea about that I was going to throw at you. So I've noticed that more and more of these co-ops for electrical springing up, for utilities, particularly in the areas where I think we're struggling the most, which is rural areas. I'm wondering if there isn't some sort of partnership there from a lending perspective for, clean energy. I feel like accessorizing your house, to your point on the mortgages, like Desert Financial has Define, which is a mortgage QSO here, which has just had its best year ever. But how do you accessorize that? And by accessorizing, I just think that everybody likes to create value around the products they already have. And so, what does an asset look like where you can confirm, if you could somehow sort of pave the way through the complex taxes and things to make it so that you could, get that.
Yeah, what you're talking about is kind of a TurboTax package knowledge that says, as I'm getting my mortgage application, I've got my address and geocode, and I know the programs there in the knowledge base, and I can match those up and then say, hey, by the way, would you like to put solar, would you like a solar credit is what you're saying. It's a shopping cart around configuring your home.
Right. And I think that's what we're going to have to do, because we have to see around that curve that, we just had a mandate yesterday for mass again. It's interesting because in your state, the one I'm in right now, it actually goes against the federal mandate. So the CDC said everybody in a red zone, which apparently I am at the moment, should be wearing a mask indoors, yet the federal side of this said no. And it's just resulting in a lot of people who are still working from home. And if you're going to work from home, we all discovered the challenges of that. Like, suddenly you need a place for the kids. Suddenly you need a place for all these other things. So if we can sort of address that future and create opportunity that allows them to take advantage of the market and where it is and accessorize, I think, because here's the thing that I've always wondered, Steve, is if I took and pulled the credit report on all the members for the credit unions on this call that were kind of the core members, I think of them as the home banking active members. Those are the ones, right? That's the 20, right? That's carrying the other 80 that are sort of engaged or not engaged. How much money do you think on the credit report they have elsewhere that we could convince them to bring to the credit union to grow organically, as opposed to trying to get new members and just get 10% of their portfolio?
Right. My guess would be there's twice as much outside as there is inside when you count the liquidity of things like brokerage and mutual funds that aren't held in a 401k that's harder to move. So and I think you've done that. I remember doing this at Westcom, that when you run the credit or loan share of wallet, it typically is a couple times bigger, if not 3 or 4 times bigger of credit outside our loan with other institutions. So that's for someone as good at data as you, that's a great one, is how do we create a programmatic approach to repatriating our members' money to the credit union, but how do we somehow tie that to subscription pricing or share of wallet pricing? And your solar one's interesting because one of the trendiest things right now for us to do is go buy solar paper because we have liquidity. And I know someone who helps originate solar for credit unions. And one of his frustrations is they're getting these borrowers from outside the credit union as new members to fill their balance sheet. They're not taking that exact same product and trying to market it to their 80,000 members.
Oh my God.
So your point, John, is instead of just watching some of these innovations occur in fintech, let's watch. They're probably going to be early because they're entrepreneurial and in garages, but let's co-opt some of those ideas around acquiring new product usage and servicing it ourselves.
Yeah.
I think that's what they're good at marketing, and they're ahead of us on customer acquisition. They're just better at, if you look at why is everybody looking at Upgrade on the small dollar loans right now? It's because they've done a good job finding those people better than we've been able to. And part of that's where we're a little bit kind of in our box on credit. That's been very helpful for us because we haven't lost a lot of money, but then does that hold us back in the new market? So every time you see an Upgrade or a solar lender or a Chime, we got to look at those blueprints and say, is there direct acquisition or engagement we can do with our member base using those use cases essentially?
Yeah. And I think that as we look at Chime, you mentioned it earlier, but what Chime's really big claim to fame was? They understood Google search better than any of us.
Right.
Exactly. And they figured, because it changed. By the way, the Google search changed in 2020.
Oh, yeah, it was a big shot. They knew that was coming, and they were ready to be top of search.
And it was all about completion. And so that's why there's one button and one field on their front page. It says email, and then it says get started. And every time someone clicks that and just puts the email in, Google goes, oh, well, Steve Williams must like Chime better than he liked when I sent them to ABC Credit Union, because he clicked, but he didn't fill anything in, and then he didn't do anything after that. And so they've recognized the Pavlovian sort of response is important. So yeah, it's fascinating to me. So let's do this. Let's let you keep going, but I also want to take some questions from folks. But go ahead.
Yeah, last slide I have, you talked about. You said death by 1,000 ACH, but I think what's important when we talk about NSF, OD, and interchange is it's critical to your top of wallet strategy because there's just, if you think of all the ways that payments are being displaced, you've got Apple Pay and Google Pay, but you've also got obviously the Starbucks and other stored value that's sitting there. And then you've got now, when you do buy now, pay later, 80% of people who do buy now, pay later already have a credit card. So that's an interesting one. Why didn't they just charge it? And
yeah.
It's that friction thing. It was right there. It was almost, I would have had to reach in my wallet and type something in, where this was, but if you look at folks like Affirm, and there's a lot of credit unions now trying to get into this, which is basically saying, instead of a credit card, I'm going to do a micro unsecured loan. But think what that does. That's interchangeless, what just occurred. And then of course, your big world, where I should have listened to the man 10 years ago and bought the Bitcoin. And that's why you're out buying houses and I'm at Taco Bell. But,
but I did tell you.
Think of what crypto could do to this, obviously, in the long term. So we're monitoring, you got to look at this, and we think there's already been $2.5 billion of lost revenue just from what we'd call payments displacement in 2020, when you add all these things up.
And just a quick question before, but what do you think happens? Because Amazon clearly is saying no, but so did Jamie Dimon, right? And we were actually talking to a gentleman that worked with him last night and came up with him. But and he was famous. He said he had a Bible, like it was, first thing was every year cut half your staff and then cut your sales or whatever. But what I found fascinating is that what if Amazon starts taking crypto? But I don't think that in and of itself is a big deal. But what if they add the benefit of saying, oh, by the way, every time you buy something with crypto, since we have a smart contract in place, we can more easily refund you and return the money. We can give it to you cheaper because we can do this. We can give you a receipt that you can show in your history. Those rails are so much more robust than the 16 digits that you mentioned earlier with the cards. Yeah, so
that's a bit of the nuclear option. I saw this week, John, that they have posted for a crypto executive. They're recruiting
and 10 more on Indeed, 10 more positions.
Yeah, and but also
maybe
Walmart.
I should apply.
Walmart is another player who sees some form of crypto as a great way to stick it to Visa, which they've wanted to keep doing for decades. So I think your point is the ability to have even more robust information on the blockchain about customers, payments, transactions, preferences compared to, how we scrape it from the Visa network. That's there. And then somebody like Walmart just says, what's the economics? I'll give some of the value shift away in customer benefit if they'll migrate, is your point.
Yes, I think that's what's going to happen. I think they're going to say you can pay $10 for it if you want to use your debit, or you can pay $9.50 for it if you want to pay through Bitcoin.
Yeah.
Yeah. And
Right.
what does that do? It means people are going to start building up a crypto account, which has now become fairly mainstream.
Yeah, it's kind of, there needs to be a DEFCON system from people like you as those announcements start to take root, because it will shift quickly. Right now, we have to wear our Visa MasterCard jerseys. And,
but like I call it, everybody pulls them off, and underneath them it says, crypto forever.
Yeah.
It's kind of like the old, did you ever watch Married with Children? They had this club called No Ma'am. And every time the wives would show up, that one guy would take off his shirt and he had a Yes Ma'am shirt underneath there that he was ready for.
He's ready to go.
So
but we do it right now. We have to kind of optimize in this world, knowing that world could be coming, and there could be some big groundbreaking things. Ken, there is a lot in Visa that's about behavior and legal, and there's we've built up a lot of infrastructure that's not just technology. It's knowledge, it's habits, it's all kinds of things. It's how I get this when I have a dispute, that when I was on vacation in Cairo, that we're able to get that done quickly. That's hard to replicate.
And if you transfer money to the wrong place in crypto, you never see it again. I mean, there's no doubt there's a lot. I think Gary has a question. Gary, go ahead. Mr. Coates? Mr. Coates is at WANA Credit Union once he unmutes here.
Hey, Gary.
Hey, John.
Hey.
Hey, Steve.
Hey.
So I have a question about member engagement as a possible way of rewarding members that are engaged using data analytics, and pushing other members that are not as engaged, because the theory is the more engaged they are, the more profitable they are, right? And then also for card interchange income, to replace for the lack of NSF fees, using digital analytics to predict when an overdraft is going to happen, and be able to proactively transfer the money to cover that, so the member doesn't get dinged. But then you need to be able to communicate that to the member so they understand that added value.
Yeah, it's a good point. What you just described, Gary, is kind of like when Verizon says you're about to go over, but we happen to have a data offering that's one step above and it's only X. So do you want to upgrade? So, that idea of being proactive, but then kind of, but that's the benefit of the subscription. That's the, John's point about the autonomous banking that you get here. And, you pay a fee, but you end up spending a lot less based on all the benefits.
Right. And then isn't card interchange, that's how the NSF fees are going to have to be made up, right? So look at your data and see members that have at least one payment that they're using your card for a utility bill, Netflix, Amazon, whatever it is. If they don't have a bunch of them, then encourage them, and you're going to probably need to give them some kind of a reward to pay those bills with your card.
Yeah.
And preferably with a credit card versus a debit card, because interchange is higher on a credit card than it is on a debit card.
So here's a thought, just throwing it out there, Steve. What if you built an account that was like, you paid $30 a month, but with it, we would pay, you could get 10 subscriptions. So you could get Hulu, Paramount, HBO Max, and whatever. Like, you would get value because you would get 4 subscriptions for that, or 5, when it would actually cost you $50 or $10. But we're actually subsidizing 2 of them because we'll make it up in the interchange in the long run.
Right. I think what you're saying is if we can kind of be a gateway to services, but the deal is you have to put it on our credit card.
Yeah.
You pay through our credit card. So we've taken a big share of your monthly wallet and we're going to run it through credit. And because of that, we know exactly what we'll make. And so there's some benefits we can pass on in that packaging.
We'll pay for your Prime,
Right.
We'll pay, or whatever. I mean, who wouldn't do that? It makes sense. You just have to keep it from hopping around, but
Yeah,
I
Mike's
think
talking
there's-
about the bundling now that I've had this from Verizon, and you had it from AT&T, Mike, is that Verizon, AT&T are trying to push the entertainment subscriptions to their subscriptions now.
Yeah,
So-
DirecTV.
So Gary's point about bundling, the one about engagement's interesting, Gary, of, how do you create an economic model on engagement, and what are the benefits of that? A couple of things real quick on spending I've seen. I have seen some folks start to move towards actually purchase volume benefits versus number of clicks. Because you remember when we all had to do 25 clicks to get free checking, and people bought 24 packs of gum on the way to Taco Bell. And so we weren't getting the revenue we'd hoped with the program. Some have actually gone to, if you spend this much, you get X, benefit. The other thing I've seen is I'd point out someone like the team at Penn State Employees Credit Union, where they've actually have heightened points on credit card, heightened payout or premium payout on points for credit card if you have a checking account and pay your credit card monthly through the checking account. So they're trying to tie checking and credit together, but to Gary's point, give some engagement benefit through pricing there. I think the more we can bring checking and credit together in a top of wallet strategy, the better, because that's going to have the most income. And I think there's ways we can do that without getting people over their heads on credit.
So, Steve, have you seen this? I'm going to share my screen here for a second. Have you seen this? I was blown away by this. Look, for Discover this is Amazon's site, and these are my payment sources.
Mm-hmm.
Look at Discover. They're actually showing you how much dollars in rewards points you have, and it'll let you use them.
Yeah,
you can just pay with your rewards points.
It's very. I use a Chase account for points all the time.
But does it show up? Does it show up in the Amazon wallet like that?
It does.
Does it show up right here? Huh. So come on, that's like a huge game changer when you're starting to impact it here. And then what happens if, you talked about the DEF CON, what happens if this pops up and they say, oh yeah, this is going to be $10 cheaper for you if you just do this, and this being the ACH mode here.
Yeah.
So, well, it's been a great discussion. It's awesome to have you. I really appreciate it. We're going to be sort of replaying this. So I think we have to get to the underrated songs here.
Okay.
Okay. So I've got mine. I'm going to go through all lead singers, and I'll throw mine out, and then you do yours, and we'll see which way we go.
So lead singer. David Lee Roth, most underrated song, hands down, is "Mean Streets" off of Fair Warning. Just an incredible rock and roll song. Overrated is one everybody knows, "Hot for Teacher." It's not that great of a song. It really isn't even a song. It's kind of a jam. Very overrated. Mm-hmm. Sammy Hagar, underrated, probably not enough. The slow song.
Yes.
Overrated has got to be "Best of Both Worlds."
Really?
Yeah.
I would not. I would have said right
Gary
now.
Sharon. It's just a disaster. I'm not going to talk about it.
Okay. All right, I'll give that to you. All right, so here are mine. I would say the most underrated song for Van Halen for DLR is "Secrets." I just thought that was a really emotional song. It was really well done and showcased a lot of Eddie's melodic capability. Probably the most overrated song, in my opinion, is actually "Jump." I just think that, what they say, three chords and that was kind of it. For Sammy, most underrated song, "Man on a Mission," one take vocal, unbelievable. Overrated song for me is "Right Now." Again,
too poppy.
Too poppy, great message. And then for Gary, most overrated song was "Without You," because it was horrible. But there was actually one song I thought was pretty cool on there, which was "Once." And I thought that was like some really great writing by Eddie. So there you go. But I will go with you on yours other than "Hot for Teacher." "Hot for Teacher" is a masterpiece. And anyone that says different, I will meet you here at Desert Financial in the parking lot to fight. And I feel like you're saying that. So I will be down there shortly to fight you. I do have one more thing I wanted to share with everybody. And Steve, you might dig this too. Just real quickly. I'm an avid reader of this magazine. And a lot of people that come on here are interested in learning machine learning. I think everybody should know a little bit about AI. You should know a little bit if you're going to be in the creating space. this is a great, they're just going over some machine learning. It's really a fun magazine if got kids that are into it, but most importantly, this just really crystallized. I thought it was really well done on how they came up and said, you know, hey, it shows you some use cases. It gives you some idea how it works. And, you know, you'd be surprised. It's not a grading magazine. It's not a financial magazine. It's just a hacker magazine, but it's very, very cool. It's called Make. You can find it pretty much anywhere. You can buy it online. I highly recommend take a look at it. I'll just throw this link in there. And with that, Steve, how can people find you? You just said that people should contribute. How do they do that? Where do they go? Can you put a link in? You know, if there's somebody on here that says we're not being part of the value proposition of Cornerstone and Gonzo, how do they do that?
Oh, great. I'll just put our website in there. And also, if it's okay, real quick, let me get a link. I know people have to go, but I'm going to chat this link to the FinTech, the Fin Health Network spend report by the Financial Health Network.
Oh yeah, you were talking about that. I was going to ask you about that.
Some good data for you guys to take a look at about the low to moderate income, how they spend their money. What do we do about bringing financial health to this? And I don't think anyone on the line wants a consumer paying $1,200 a year in NSF and OD if they can't afford that. If that's not a rich attorney who's driving a Jaguar, we don't want that. So how do we use data? How do we use data to start steering people the right way?
100%. And I believe everyone, that's the best part about this industry. And I know we've had that discussion many times. Steve, thank you so much for joining us and sharing.
Great talking to you guys. Kevin, good to see you again. I hope we talk soon.
Yeah, we'll come back on.
All right, man.
Good to meet you, Steve. See ya.
Gary, thanks.
Well done,
guys.
gents.
Thanks, everybody. Thank you, Mike. Good to see you, bud.
Yeah, good to see you too, man.